How's it going, everybody? I'm just going to wait a couple minutes for people to start joining into the live stream, for people to start checking out those tweets that are being sent out and those Discord notifications, everything like that. But just a little bit of admin for people that are watching the recorded version of this live stream on YouTube. The usual format is this is about 1 hour long, but I would like to note or just let people know that it is kind of a linear format in terms of the lessons and the lectures that we're going over, the little tidbits of technical analysis and trading mentality. It is kind of linear. So if there's anything that I don't cover in this stream or anything I do cover in this stream, it doesn't make a lot of sense, but you have a question about, you can either drop it down below and I can re-go over that or go over that one more time in a future live stream. Just want to let people know that if there's something that I mentioned, I say, all right, we covered Dow theory last week. And you don't really remember me covering that, you can actually go back to those older recordings. They're all listed on YouTube under the live stream playlist on Bybit's main YouTube channel. You can check that out and get a good understanding of whenever I actually go through those in detail. But yet again, if there's anything that I touch on in this live stream and I say, all right, this covers or actually links to Dow theory or this links to the RSI indicator, and you don't really understand that, or you don't have a great perspective on it just yet, you can actually just comment and I'll go over it real quick as we move through this lesson. But I'm going to give it about 1 more minute for just a few more people to jump in and react to and see those Discord and Twitter notifications and announcements. But for the people that are already in here, go ahead and drop, if you'd like, where you're located and what time it is for you. I hope everybody's having either a happy Friday or a very happy weekend, a very happy Saturday. I know it's Saturday morning for a lot of people during these live streams. It's actually Friday morning, right around 11 a.m. for me. I'm located in Austin, Texas, but I know there's people all over the world that will be tuning in. So go ahead and let me know where you guys are located. So I just have a good idea as to how to time these streams out, maybe in the future, switch it up, something like that. But just to get started, what we're going to go over in today's live stream, there's 3 little sections, and we're going to cover, I guess, 4 different things. The first is going to be Wyckoff Theory, which actually ties pretty closely to Dow theory. It uses a lot of the same tenets from Dow theory. And you don't really need to have a good understanding of Dow theory for Wyckoff Theory to make sense, because the explanation I'm actually going to run through is going to cover a lot of what Dow theory said or whatever I went through last week. Then we have Fib retracements and Fib extensions, or Fibonacci retracements and extensions, a couple indicators that are very useful. I'd say those are 2 out of the 3 indicators that I actually use. I don't use a lot of indicators when trading, but those are 2 of the big ones. And finally, we're going to get into trading US dollar versus Bitcoin pairs. This is a big question I've been asked probably for the past 4 or 5 years, just about trading in general, especially trading cryptocurrency. Is it better to trade against Bitcoin? Is it better to trade against US dollar? / what's the difference? What do I have to actually process in my head or in my trade outline whenever I'm looking at a Bitcoin pair versus a US dollar pair? We're going to cover all of that in this live stream. And at the very end of this live stream, get your Telegram or Discord usernames or IDs, whatever you use to identify yourself on those platforms, ready. At the very end, in about 55 minutes, probably about 50 minutes, we're going to be doing a nice little giveaway. Make sure that you are signed up for Bybit, because you do need Bybit's account or a Bybit account in order to get that bonus, and it's going to be a derivatives bonus, but I'll announce that at the very end. So either stick around or make sure you tune back in towards the end of the hour if you'd like a chance. It's going to be a complete random selection. You don't have to take a quiz or anything like that. You don't have to subscribe to the channel. All you have to do is be in here and submit either your Telegram or your Discord username. And you're going to get a good chance, actually a pretty good chance, depending on how many people join the live stream, of actually getting that nice little bonus. So let's go ahead and get started, just for continuity, as we get into the actual presentation. So let's pull that up real quick. This live stream is called Trading Mindset. This is the 4th live stream that I've done so far with Bybit. My name is Brandon. You can also check out some of the other content that we create on the from the YouTube team on the Bybit YouTube channel, across Bybit Socials, everything like that. This is called Trading Mindset. It's my little live stream, and let's go ahead and get started. Quick disclaimer for everybody out there. If you don't already know, this presentation should not be interpreted as financial advice or an investment recommendation. Trade and invest at your own risk. pretty self-explanatory there. But let's go ahead and get started with Wyckoff Theory. Sounds pretty crazy. If you've heard of it or not, it's actually pretty essential to the psychology of market cycles, and it's very applicable to cryptocurrency, not even just long-term market cycles, but you can actually use this for intermediate term, probably not short term, I wouldn't suggest, because a lot of it does depend on sentiment and kind of the emotions and psychology of crowds, very similar to Dow theory. But this is called Wyckoff Theory. It was created by a man named Richard Wyckoff. Makes sense. And it reflects the psychological relationship between institutions and retail traders. That's kind of a simplified definition of Wyckoff theory and kind of the overarching theme, but it does technically make sense. So there's actually two different types of cycles that go into Wyckoff trading theory. And I actually created this little graphic on the right side over here. I just didn't want to copy somebody else's because that would be rude. So this is kind of my representation of what the Wyckoff trading cycle looks like, although it's very standard and you'll see the exact same thing in any trading books. I did source a lot of this factual information from Technical Analysis of the Financial Markets by John J. Murphy, just a book that I use to help me with understanding technical analysis. And I did give a good list of the books I use for technical analysis and market theory in last week's live stream. You can actually check the comments down below, and I gave a full list 4 really good books if you're looking to start learning technical analysis and the emotions of market theory. So let's go ahead and get started with the 4 repeating phases of the Wyckoff trading cycle, and you can actually refer to the graphic on the right side as well. So there's 4 phases, and it kind of lines up, or almost perfectly lines up, with the market movement or the price movement that we're seeing from the graphic. So we have accumulation. That's the first phase. Markup, that's the second phase. Distribution, and finally the markdown phase. There are crowd and participant emotions that are associated with each and every one of these phases. I will get into that in just a moment, but I want to talk about how it ties into the emotional side of Dow theory first. It can be a little bit confusing, I know, because we're talking about 4 repeating phases. Remember, these repeat over and over and over again. So as soon as we see this markdown phase, the next phase in sequence will be that accumulation phase yet again. But it does tie to Dow theory's emotional market cycle, which has 3 phases. This is where it gets confusing. 3 phases or 4 phases. Think about the actual trading cycle, or what you'll see on the chart, as 4 separate phases, but the emotional cycle is actually 3 phases. So it can be a little bit confusing. For people that are joining in, new to the live stream, go ahead and drop your either where you're from or your, how do you say it, your time zone, so I can know where people are located and how this is going so far. So we have 4 phases of the emotional market cycle according to Wyckoff, but he also did base this on Dow theory. So Wyckoff theory did come after Dow theory. Remember, Dow theory was created based on a bunch of editorials, a bunch of little, what do you call it, little tidbits that were printed, but Dow theory, or what was his name? Dow and Jones, they never actually printed anything or called it Dow theory. People just kind of created the theory based on his editorials. So for Dow theory, we have, for the emotional market cycle, we have 4 different phases. Let's jump right into them. Number 1 is going to be disbelief, and this is actually going to be associated majorly with the accumulation phase, the accumulation part of the cycle. And that's going to be during the end of a bear trend. The public expresses overwhelmingly bearish sentiment and a belief that the price will never recover. And at this point in time, institutions begin entering long side trades. So we're going to look at this graphic on the accumulation part of the cycle, and this is associated with a general sentiment of disbelief. So think about how the general public, and a lot of this goes into where you get your news, if you actually read news about cryptocurrency, or you use, Cointelegraph, CoinDesk, Crypto Twitter, YouTube, wherever you get your crypto news from. What is the general sentiment? Whenever we are at the bottom of a bear cycle or a bear trend, the general sentiment is extremely negative. Most people will portray sentiment that basically says there's no going back up. If Bitcoin goes down and it's at, $3,900, it's never going to recover. We're never going to see $20,000 again, which is technically referring to that 2017, 2018 cycle. But you can talk about intermediate term cycles or use this to refer to intermediate term cycles as well. Perfectly applicable to those longer term timeframes and the intermediate term timeframes. So it's a general sentiment of disbelief. Pretty much everybody's saying, I don't believe that Bitcoin will ever go back up. And this is right around the time when we actually see that reversal and a transition into that markup phase. So think of this as a bottoming out moment or a reversal from complete bearishness to a move back towards the bull side. The way we usually view accumulation cycles, or the way they usually are portrayed on the chart, is either a sideways trading range. Either, it could be completely sideways. It could be a little bit, a little bit at an angle up, a little bit at an angle down. It could be a triangle or a spring formation, or it just could be a general pennant or flag formation. Just any type of bottom side. Well, actually, a flag would be a continuation and a pennant. So think of it as either a triangle or a trading range for our accumulation phase. That's what we usually see during this period of time. Next, we have acceptance, and acceptance is really either our markup or our markdown phase. So think of disbelief as our accumulation phase, and then acceptance as our markup in this phase of the cycle. Acceptance would be following a trend reversal. Prices moved high enough to confirm the new bull trend to traders, and acute retail investors start entering those long side trades. So think about, we start breaking out of a bottoming out formation, which is technically our accumulation, and we get a little bit of confirmation. We see this nice little bounce against that top side resistance. So that resistance will now flip into a support since our price has risen above. And people are starting to say, especially acute retail traders are starting to say, all right, this is looking confirmed for a long side trade. This is looking confirmed for a reversal towards the long side, and we may just be at the beginning of a brand new bull trend. So this is referred to as the markup phase. The markup phase actually includes usually this 1, 2, 3, 4, 5 that I kind of credibly depicted on the chart here, or on my little graphic here. So a nice little 1, 2, 3, 4, 5 Elliott wave, basically just a nice little impulse wave up towards our next phase, which is referred to as either distribution. Well, it's referred to as distribution, but the emotions along with that are referred to as consensus. At this period in time, the public is in agreement that the current trend is bullish. Sentiment expresses belief that the price will continue to move higher and cannot correct. At this point in time, we usually see institutions and acute traders exiting longs and beginning to open up short trades and short positions. So this is going to be what looks like our third phase of the Wyckoff trading cycle. So we start with a little bit of disbelief, or actually a lot of disbelief, as people say there's no way Bitcoin or cryptocurrency could ever rise back up to old all-time high levels or move higher in general. This is basically the end of Bitcoin. You'll see that a lot. You'll see Bitcoin pronounced dead during the accumulation phase. The markup phase, again, at this point in time in the accumulation phase, we see those institutional traders, basically the guys behind the scenes, start to enter those long side positions, basically waiting or in anticipation of the markup phase. During the markup phase, this is whenever we see actual confirmation of a new bull trend and hopefully a move towards the distribution phase. So this is when acute traders will start to either say, I'm about to enter a long position, they prepare to enter long positions, or they actually do enter long positions, depending on how conservative of a trader they are. As the markup phase continues and actually concludes, we get into the distribution phase when we see something very similar in price formation to the accumulation phase. This is, again, could be a horizontal trading range. This could be a triangle. It could be a wedge. But basically, we see a rounding out in volatility. We don't see giant price jumps like we see through our markup or our markdown phase. We see a general trading range and a general consolidation of volatility. At this point in time, institutions and those very smart retail investors will begin to exit their longs, identifying this point in time as probably the top for either Bitcoin or the cryptocurrency they're associating this cycle with, and maybe even opening up some shorts to follow this and actually repeating this cycle. Actually, we get into acceptance yet again as we move into the markdown phase. People say, all right, we've most likely confirmed towards the downside. We see this nice little bounce against what previously acted as a support, the green line towards the distribution side here. The green line previously acted as a support. Now that we've crossed below it and probably closed below it, we push back up and we see that now act as a resistance. And we come down probably lower than that previous low that we just saw. And now we're like, all right, we've confirmed for the markdown phase. We're most likely going to see a continuation of this bear trend. We're fully confirmed, and retail traders will start to say, I think I'm going to start opening up some short side positions. So this is a general cycle for what we look at within both the intermediate term and the long term for just about any single tradable market. it will look a lot more similar to this or a lot cleaner on markets with the highest market caps. On cryptocurrencies with low market caps, it probably won't follow this to a T, and it might even be it might just look crazy. That's because it has such a low market cap that it doesn't respond well to technical analysis, and you don't see those usual market forces actually affecting your price. But for something like Bitcoin, Ethereum, and your higher market cap coins, you'll actually see the Wyckoff trading cycle to be pretty applicable both in the intermediate and the long term. How's it going, Rocky Gamer? Welcome to the stream. You got 7 trades and 5 losses. That's just the way it goes, man. I hope you're using good stop losses, because if you have good stop losses set, then actually with 7 trades and 5 losses, you're probably a little bit down. If you have a decent risk reward ratio, you might actually be able to net 0 on that. So what are you looking at for risk reward ratios? Because I love to help you out with that little streak you got. We talked about streaks last week in the stream and dealing with that emotionally. But while I wait for that response, let's go ahead and move into Fibonacci retracements, and I will show how to draw these on the chart properly rather than just drawing them willy-nilly, which I hope nobody's doing. So Fibonacci retracements, if you don't know about Fibonacci, he actually had a different name. I can't remember it off the top of my head, but he goes by Fibonacci, no first name. It's all based on this Fibonacci sequence, which goes 0, 1, 1, 2, 3, 5, 8, 13 until infinity. This actually produces a very important number called the golden ratio, which is actually 1.618, which I believe you multiply each number. So if you multiply 3 by 1.618, you get 5. If you multiply 5 by 1.618, you get 8, so on until infinity. But what we use for our indicators, both the Fibonacci retracement and the Fibonacci extension, are actually based mathematically on this Fibonacci sequence. You don't technically need to know the Fibonacci sequence at all. The golden ratio, you'll see it on your Fibonacci retracements, but yet again, just a little bit of background if anybody's interested. Definitely not a need to know for actual trading. Now, what can you use a Fibonacci retracement for? I like to use them for all of the above that I have listed, but you can definitely use them for support and resistance levels on your chart, predictive support and resistance levels, as well as we get into those Fibonacci extensions, entries, sell targets, and stop loss orders. So pretty much every single aspect, every single important line and level on your chart. So Fibonacci retracements can be very, very useful. When applying a Fibonacci retracement to your chart, and I will show this on TradingView in just a moment. I just want to read it out. Begin at the bottom of your trend and drag up to the peak. So think about a bull trend, begin at the inception and end whenever we reverse. And they can actually be manipulated. I like to manipulate my Fibonacci retracements and extensions just a little bit. I like to draw them a couple different ways and then actually compare them. And I'll show you all how to do that in just a moment. So a few different ways you can manipulate. You can start at the breakout confirmation rather than the absolute low or the trough. You can draw based on full shadows, which I'll show you all how to do, but you can also draw based on opens and closes, and you'll actually get a different result and different reactions in the future to your Fibonacci retracements and extensions, whether you draw them based on your full shadows or your opens and closes. So I'm going to show this on the chart real quick. Should I read through the rest? Let's just do that real quick. So applied Fibonacci zones act as common retracement zones following a bull trend. So that's what a Fibonacci retracement actually does. These zones include 0, 0.236, 0.382, etc. Now, those that are highlighted in bold on this slide are going to be 0.382, 0.5, and 0.618. These are going to be the most common zones that we actually see a retracement to, especially following a bull trend. So let's say we see a nice bull trend up, and we draw our Fibonacci retracement from the bottom to the top. And we get those zones that kind of are sprawled or laid out across our previous price action. And we use these zones to predict and confirm other indicators as to where will we probably reverse, where should I set a stop loss, if we actually break through this zone, where should I set my entry, everything like that. But the most common zones that we will actually retrace to following a bull trend, or if we can flip that as well for a short side trade and a bear trend, are going to be 0.382, 0.5, and 0.618. Although, just a little fun fact, 0.5 actually isn't a number within the Fibonacci sequence, but it is so common as a level that our price will retrace to following a bull or a bear trend that it's actually included on our Fibonacci indicator. It's a nice little fun fact there. Let's go ahead and add our chart to the stream. Is this a Fibonacci retracement that I already have on the chart? That is so prepared of me. Let's go ahead and take a look at this real quick. I'm going to take this off the chart and I'm going to show you guys how to draw it and how to get to it. So we're going to go over to the left side of our chart on TradingView. It's going to be a pretty similar setup for Coinigy, or if you're using kind of an in-house exchange. They will also have a lot of these indicators depending on the exchange you use, hopefully Bybit. So we're going to bring it down. We're actually going to start from the top of our bear trend through here, and we're going to bring it all the way down to the very bottom as to what we predict is the end of our bear trend. So we're looking at Solana to US dollar tether on the daily candlestick time frame. This is also on Bybit. And we draw it from the top of the beginning, or kind of basically the reversal of what we saw as the inception of this new bear trend, really on the long term, I would call it, from the inception all the way down to our current trough. And we say, all right, we can use this as either a confirmation towards the upside if we start to see a little bit more bullish price action, and a confirmation back towards the bull side, which we're really butting up against right now. Just for a quick little technical analysis tidbit, we're actually butting up against that level at 106.01, probably 106 flat. We've done that 3 times now. If we can see a nice breakout and confirmation candlestick close above that level, then we'd be looking good for a nice little continuation back towards the long side. And what we can use is our Fibonacci retracement for setting up either maybe a confirmation and an entry at right around $118. Obviously, we don't want to use this by itself, just like with any single indicator. We don't want to use them solely. We want to use it either in combination with another indicator, or probably in combination with price action confirmations. So we see, all right, we push back up against 118, and we see some nice price action confirmation above that level. We see a close above that level, especially on the daily, maybe on the 4-hour as well, if you're looking for a shorter term trade. And we're like, all right, we'll probably move up to that next level. But what next level? You can use our Fibonacci retracement levels in combination with just horizontal support and resistances. A lot of times they do line up pretty well, which is what we're already seeing on the chart. If we look at these individual levels, I can move this over real quick just so you guys can see. Let's make sure that's lined up nice, but so you guys can see these numbers a little bit better on the left-hand side here. We see 0.382. So basically what that means is we come all the way down from our peak through here, the very beginning of our bear trend, come down 100%. This is 100% of the stretch of our bear trend, assuming that this is our reversal. At this point through here, our current price action, we're not going to move lower, and we're actually going to see a confirmation towards the long side. This is predictive. If we see that and we see a move back up to the 0.236 zone, that means we've actually retraced from our bear trend 23.6%. As we move higher at our 382 zone, if we reach that same level through here, about $145, then we've retraced 38.2% of the overall magnitude of our bear trend, and that continues higher and higher, getting up to 0.5 or 50%, 61.8%, etc., etc. So we can use these levels, like I said before, as a confirmation, as a support or resistance level. So we say, all right, this aligns really good. At 117.845, we say, all right, we saw a peak through there in the past based on our top side closes. And we're like, all right, we've got one confirmation from price, but we don't have another confirmation. We've got a little bit of confirmation back through here in terms of historical price action, but we don't know if we're actually too sure yet based on price action. So we throw on a Fibonacci retracement, and now we say, all right, we've got perfect alignment at our 23.6% zone. Now I am confirmed for my trade, or it's confirmed as an important price level because we have an indicator and our price action to confirm. We're double confirmed, and that's sufficient for me. As we move higher, we see the exact same thing repeat. So we can draw a horizontal support and resistance flip through here, lining up with, you can draw that as red, make it a little bit bigger so it can be seen well. Line that up with our 38.2% zone, and then we look through our price action. We say, all right, we've got some good bounces through here. We've got a nice hold of support through this area, nice hold of resistance through here, act as a very short-term breakout zone, and then flip straight into a breakdown zone. So this is an applicable price level. We also see an approach through here based on these bottom side shadows, and it aligns perfectly with our 38.2% zone on our Fib retracement. So now we can say, all right, this is confirmed as an important price level. You can either act or use this as a confirmation or an entry confirmation towards a long side trade, or you can just make it a sell target and you've actually almost completed your trade outline using a combination of price action and our fib retracement. So we say, all right, this is our confirmation level at 118, really $117.84. We say if we can see a close above that level, let's go ahead and open up a long side trade. But where do we set our sell target? We use a combination of our fib retracement and our price action to set a confirmed sell target right around $144. As I spoke about in either the last stream or 2 streams ago, we want to beat out those other traders. So if we see that confirmation above this level, we go ahead and set our sell target just below that very common level. A lot of other traders may just be using, especially in the long term, our fib retracement aligned with and seeing those other price levels, all that price action. So you want to beat out those other traders rather than setting it at exactly 144. We bring it down just a little bit, maybe 141, and you're still looking at a 17.84% long side trade, spot trade as well, 17% on spot towards the long side with really good confirmations, all confirmed by a combination of price action and our fib retracement. So that's how you draw our fib retracement for a bear trend. And I can show you guys real quick how to draw it for a bull trend. So we're really just going to flip it instead of starting at our peak and dragging down to our trough. We're going to start at our trough like we see through here, this little intermediate to long-term bull trend. Start our trough, drag up to our peak through here based on our shadows. And now these levels will act as possible retracement levels for our next trend. So our bear trend that follows, basically what we saw was we actually broke down through all of this. We didn't see a bounce from any of these very common levels, which would be 0.618, 0.5, or 0.382. We saw a full breakdown, and we weren't actually able to use our fib retracement for a confirmation as to a possible reversal. But what you could have used it for was nice little short to intermediate term trends, just kind of on these shorter time frames like we see through here. We still see these levels act as pretty nice little reflections of price action. So you can draw something like we see through here, draw a nice little horizontal support and resistance flip as 0.618, make this a support. And what you can use, or what you can do, is use this as a confirmation towards maybe a breakout like we see through here. We move up to our 0.382, and you can use it in the same way we just used it for our short side trade, for a long side trade. You can just use them yet again as either support or resistance flips, confirmations. You can use them as entries. You can use them as sell targets, and you can also use them as stop losses. So let's go ahead and finish out the slide, and then we'll get into trend-based fib extensions. We'll probably also throw it on the Solana chart because it just makes sense. How's it going, Alex Redes? I butchered that name, sorry. But let me know where you are from and what time it is where you are, because I'm always interested in that. So let's finish out this slide. Important notes: retracements are drawn and based off of the prior trend. So I showed that we, if we have a bull trend and then a bear trend, always draw it on the bull trend if you're looking for possible, any of these levels, possible confirmations, possible support and resistance slips for the next trend. You have one that follows directly after. And always use the one if you're currently in a bear trend and you want to analyze a fib retracement based on the previous trend, always do it on the directly previous, the one just before. Fib zones are not hard reversal points, but areas of confirmation that may be combined with technical analysis and price action analysis. I really feel like I hit that point or drove that point home while we were looking at the chart, so I don't want to repeat that. Next, and the final indicator that we're going to talk about on this live stream is going to be the trend-based Fibonacci extension. So this is just a variation of the fib retracement, but it actually provides a different use, and I will get into that. Excuse me just a moment. A little bit of coffee coming back up. So we have the trend-based fib extensions are drawn in a similar manner to fib retracements, but actually require 3 inputs rather than 2. So whenever we drew our fib retracement, we started at one point, we dragged up, yeah, it's proper, dragged up from the bottom to the top of the trend or from the top to the bottom of the trend. So 2 inputs, 2 little points that you just have to identify on your chart. For a trend-based fib extension, you're going to use 3. You're going to drag up and then back down, or you're going to start, you're going to drag up to the top, and then you're going to drag back down. You can also flip that. So you're going to begin at the trough of the trend. You're going to stretch to the peak. Trough means bottom and peak means top. And then back down to the trough of the very next trend. So I'll show you guys how to use that as an example on that Solana chart in just a moment. They provide levels of similar significance to Fib retracements, so it's very similar, pretty much the exact same thing. They may also be used to determine possible support or resistance, entries, sell targets, and stop loss levels. But yet again, you always want to use these in combination with other indicators and with price action. So you don't want to use your trend-based Fib extension by itself, although you kind of have to in certain situations. I will explain that situation, which is pretty much the main reason you may be using a Fib trend-based Fib extension a lot of the times. So what is the actual difference between a Fib retracement and the trend-based Fib extension? Because this is a big question. It probably took me a long time to figure this out myself. So a Fib retracement reflects possible corrections following a trend. So we see a bull trend and we could correct down maybe 50% of that bull trend for our next bear trend, or the bear trend that follows. We could correct 50%, we could correct 78.6%. We're trying to draw and predict possible levels for a correction following a trend. For an extension or trend-based extension, this is going to reflect possible impulse or bullish moves past historical levels of price action. So I personally use the trend-based extension anytime I'm setting a sell target above all-time high levels. So anytime we don't have historical price action, so let's say we are trying to track price action above our all-time high of Bitcoin of $69,000, and we say, but where do I set my sell target above 69,000 if we've never seen price action above that level historically? That's where our trend-based Fib extension does become useful. We can draw that on our chart, and it'll give us predictive levels based on our Fibonacci sequence and predictive analysis of levels above $69,000 that you may want to set your sell targets at. So that's the difference between the Fib retracement and trend-based Fib extension. I will show you guys in just a second. Fib extensions are most useful for estimating probabilistic targets above ATH or all-time high levels. So let's move back over to the chart. Let's make it a little bit easier to see. So we're going to draw a trend-based Fib extension on Solana to US dollar tether. It's going to be the same way we get to the Fib retracement. We're going to go on the left side here. Instead of Fib retracement, we go to trend-based Fib extension. It's just below. We're going to start at our trough of this bull trend through here. So we're going to start at our trough through here. We're going to run up to our peak of that bull trend. So we're talking about this intermediate term trend. And we're going to run it down to the bottom of our subsequent trend. So our trough of the subsequent trend. That's going to be right through there to make it exact. We're going to zoom in just a little bit. And so now, let's say the highest price we've seen for Solana so far, let's say we're looking at it's September of 2021, and we've only seen Solana go as high as $215. But we actually start to see a reversal. We see a confirmation through here. We see a nice breakout. We see these closes up through here. We're like, all right, we may just move above all-time high levels, but where do I set my sell targets for the intermediate or the long term? That's where our trend-based extension comes in handy. We draw it on our chart based on these two trends. So our bull trend or our impulse wave through here, and our bear trend or our corrective wave right through here. We draw it from the trough to the peak of the bull trend, and we draw it from the peak to the trough of our subsequent bear trend. And that gives us all of these levels above all-time high. And if we drag this down, it gives us actually tons of levels all the way up to a full 423.6%. But I actually like to ignore pretty much anything above 2.618 just because it's so improbable that we would actually reach those levels in a single impulse or a single bull trend. Throughout this period through here, what we actually saw was we didn't even reach 78.6 or 0.786. So there's really no reason to use any of these high levels unless we actually start to see big volume coming in and big confirmations towards the bull side. You want to make sure we pass through all of these levels first before we even think about those higher levels, just because it's so improbable moving up to $939 after a previous all-time high of $216. Just doesn't really make sense for an intermediate term trade. For long term, maybe, but for what we're looking at through here, doesn't really make sense. Let's focus on these shorter term levels. So once we see this confirmation above all-time high levels, we say, all right, we need levels above $216, but where are we going to travel to? We start to see, all right, 0.618, that's at $235, and 0.786, that's $268. We never actually saw a touch to $268. I believe our all-time high was, we can check that, $259.96, so right around $260. Didn't get up to $268, but we did approach that level. What was really important here was this level through here at the 0.618, $235, which did end up acting as a very nice support and resistance flip for the price action that followed that new all-time high, or reaching that new all-time high. That is so thick. Make it 2 picks. And we zoom in here and we can see how that acted as a very nice inflection level. It acted as support after we saw that all-time high. We come down, acts as a support, acts as a resistance as we kind of bounce around that level, come down, we come back up, acts as an absolute high for our next nice little short-term trend here based on this topside shadow. And then yet again, based on these topside closes. So we say, all right, we can actually use this trend-based fib extension to say, are we going to continue this bull trend after we reject $260 and then we reject $234 twice? We say, all right, it's a double top, but we actually haven't seen any closes above that level. And then we see confirmation towards the downside, a close below what this level gives us right through here. It also aligns with our previous all-time high through right around $189, $190, but we use it to confirm our price action with our indicator. And now we have basically two things saying or giving us that green light for a short side trade once we can see a close below that level. And now we're saying, all right, where are we going to set that sell target? We can use a combination of our previous price action, our breakout zone through here, and our trend-based fib extension, giving us a sell target at close to $161. Now you're looking at a nice little short to intermediate term trade. Once we see confirmation below the support, we see that close, and you're looking at right around an 11.48% move. Yet again, perfect trade on spot, and an excellent trade with any type of leverage, even small levels of leverage. So that's how you draw your trend-based fib extension. It's very applicable towards the long side. Towards the short side, you're most likely just not going to run into a situation like that for cryptocurrencies, just because moving down below, $28 and trying to predict price levels below that and support just doesn't make a lot of sense when we're currently sitting at 99, and this is pretty much a full bear trend so far, and we're not seeing anything close to something like an absolute low lower than $22. If we get down below those levels, that's a completely different situation that we would actually probably sweat about. So let's return and let's see. Trend-based fib extension gives confirmation. Trend-based fib extension, I'm looking at Babatunde, or Babatunde. How's it going? Welcome, Tosin. I'm terrible with pronunciation. Please correct me. From Nigeria. How's it going? Can't believe we got viewers all over the world. But let's get into this very next and last slide, and that's going to cover trading US dollar versus Bitcoin pairs. The big question that everybody's asked at least once, what's the difference between trading against US dollar or Bitcoin? One you trade against US dollar and the other you trade against Bitcoin. But how does that actually affect setting up your trade? How does that actually affect profitability for your trade positions? So trading against the US dollar does require you to track only one fluctuating variable, the coin price against US dollar. Traders usually don't worry about the FX value or foreign exchange value of US dollar itself. So if you're trading Solana to US dollar, you don't say, the US dollar is looking a little bit bearish. I don't think I'm going to trade Solana to US dollar. Maybe I'll trade Solana to Euro. That's just so uncommon. I'm sure there are people that are out there doing that. Not to say that there's nobody doing that, but the fluctuations, tracking that across two different asset classes, it's probably very uncommon if I had to guess. And I personally wouldn't do it. It's just too complicated. Trading against Bitcoin pairs, again, reintroduces that complication as we introduce two fluctuating variables, the price of Bitcoin against the US dollar, as well as the price of your coin against Bitcoin. So this can complicate your trades, especially if your cost basis is calculated against US dollar. And I'll get into that in just a moment. The Bitcoin pair requires traders to track two volatile variables, both of which may affect your trade outcome. So before anything else, decide if your cost basis will be calculated in US dollar or Bitcoin. So a lot of people talk about stacking sats. What this usually means is that you are trying to get to one whole Bitcoin, or you're trying to get to, or just raise the amount of Bitcoin that you currently own, increase the amount. So what that means is that your cost basis is most likely against Bitcoin. If your cost basis is against US dollar, that means that you say, all right, I'm investing $1,000 into cryptocurrency and I want to start trading. That means if you're profitable in the long term, at the very end of your trading, you have more than $1,000 either worth of coins or $1,000 in US dollar. So your cost basis basically says, all right, what am I measuring the amount of value of my coins in? It can either be US dollar or Bitcoin. It can be Ethereum. It can be other coins. You know, there are Ethereum pairs out there. A lot of people trade those, but the exact same thing will apply if you're trading against Ethereum with if you're trading against Bitcoin. So if you are trading against US dollar, make sure that the trend for your pair, example, XLM to Bitcoin, if you are tracking with US dollar, make sure the trend for your trade pair, XLM or Bitcoin, XLM to Bitcoin, aligns with Bitcoin's trend. Basically what this means is you're looking at XLM to Bitcoin and you're opening up a long side position for this specific pair. Make sure that Bitcoin is also looking generally bullish, especially if you're in a longer term trade. But if you're in a shorter term trade, you should be pretty much fine. If you're trading XLM to Bitcoin, you're looking at the pair on the chart, it looks bullish. Make sure you go ahead and check out Bitcoin to US dollar as well, because what can happen is you'll see the effect from both sides. So you might see an increase of 10% on your trade of XLM to Bitcoin, but if Bitcoin falls against US dollar 15% during the same period of time, then even though you were positive 10% for what looks like your trading pair against US dollar, you're actually down 5%, or actually down not exactly 5%, but a fraction of that. So if you're trading or if your cost basis is in Bitcoin, then you don't really have to worry about that because you're only worrying about stacking sats. You're only worrying about your Bitcoin going up or your Bitcoin stash going up from 0.5 to 0.6 or whatever your goals are. So the Bitcoin to US dollar trend actually requires less attention. Your trade can be treated as usual. So you can pretty much treat it as a US dollar pair because your cost basis, while usually is against US dollar, if your cost basis is against Bitcoin, then you only track your amount of Bitcoin. So some general tips for trading against Bitcoin pairs. These can actually be pretty helpful in what I use myself. Determine the trend of Bitcoin for your current and the next largest time period. So don't just look at if you're in a short-term trade of XLM to Bitcoin. Don't just look at the short-term trend for Bitcoin. Go ahead and zoom out a bit. Look at the intermediate term trend, not necessarily the long term, but look at a few larger time frames, a few larger candlestick lengths. So if you're trading on the 1 hour candlestick for XLM to Bitcoin, go ahead and look at Bitcoin to US dollar on the 1 hour, the 4 hour, and maybe the 6 or the 12 hour, just to get a good general idea, because although we may look bullish on the 1 hour chart for Bitcoin, we might actually be overall bearish on the 4 hour chart. Those situations do happen more often than not, or actually not more often than not, just pretty often. Estimate the effects of Bitcoin moves could have on your trade before entering. So let's say you want to trade, you want to kind of counter trade. You say XLM to Bitcoin is looking bullish, but Bitcoin to US dollar is actually looking a little bit bearish in the same time frame. But based on the support and resistance for Bitcoin to US dollar, we should actually only track down maybe 4%. But my XLM to Bitcoin pair is I'm looking at a sell target of plus 15, plus 20%. So any of those negative effects that a bearish Bitcoin price move could have on your trade, make sure that the positive price moves for the trading pair that you're actually looking at will outweigh those. Finally, set alerts for not only your price pair levels, your pair price levels, but also for Bitcoin support and resistance. So basically this tracks to that first tip. If you're looking at XLM to Bitcoin, go ahead and take a look at Bitcoin to US dollar and say, all right, baseline support is 40,000, baseline support is 45,000, or resistance is 45,000. Go ahead and set an alert, not only for the pair that you're trading, but also for Bitcoin to US dollar. But yet again, we will actually see the effects of Bitcoin price moves affect and have an influence on the pair that you're trading if you're looking at Bitcoin pairs. So as we get towards the end of this broadcast, let's go ahead and take a look at what we're going to do next, which is a derivatives bonus giveaway for $50 if you're trading on Bybit. I'm going to go ahead and set this up in just a moment, but before that, go ahead and prepare your Discord username or your Telegram username. I can use either one to process that giveaway. So if you guys have Discord or Telegram, I'm actually probably only going to do this giveaway in 5-10 minutes. So if you don't have one yet, that should be enough time to set one up. So go ahead and either set one up or make sure that you have your username ready to go. I'll show you guys how we're going to do that giveaway in just a moment. But let's go ahead and do some chart analysis. I'll probably just do maybe some Bitcoin and Ether real quick, but if anybody has requests for chart analysis, I didn't see any in the Discord chat this week, but you can drop them as a chat down below for the current live stream. Yet again, if you guys ever want to see some chart analysis live on the stream, but you don't think you'll be around and you're going to watch the video recording of the live stream, you can go ahead and send the request in Discord under the Crypto Beat channel. The live stream and our weekly episodes on Monday are all under the Crypto Beat title. So you can actually drop those in there, and I will review that before the live stream. Make sure to do the analysis live, and then you can watch the video recording if you'll be asleep during this time or if you'll be busy. I know a lot of people are busy. So let's go ahead and get into some chart analysis while people can give some time for people to prepare either their Telegram or the Discord username. Let's go ahead and move over. Let's look at Bitcoin to US dollar real quick. Some fun price moves from Bitcoin over the past day or two. We're actually seeing some good confirmation back towards the long side. We haven't seen perfect confirmation just yet. Make this line a little bit thicker. I think 4 pixels is just too big. But let me know if you guys can still see it at 2 pixels. So that's our support right now at 47.30. Just kind of some baseline support from the last stream before we were actually seeing all this price action. That may have been acting as a resistance if we were just under 49 or just under 47 or so. I can't remember that exact time. This is the daily candlestick time frame. So 1, 2, 3, 4, 5, 6, 7. So yeah, that is the level we were looking at for a nice little bounce. Similar to a horizontal trading range. This doesn't look like it. You can consider a horizontal. You can consider a lot of things a horizontal trading range. That you could also consider a triangle or a wedge. I'd probably consider it a triangle at the moment, based on. We can just kind of give some shape to this general formation real quick. I wouldn't use this for confirmations, but I would use this just to get a general idea as to our current trend. So there's the top side. We're seeing slightly lower lows, but we don't know what we've seen or what we're going to see just yet because we're butting up against that price level. From the bottom side, we can go ahead and take a look at this. Again, this is the point in time when the stream, I got to pace myself when I run out of breath. So that's what we're looking at from our bottom side shadows, but that doesn't give us a lot of information because we see a lot of slippage and we didn't actually spend a lot of time periods. We didn't actually spend a lot of time at these levels. So what I'm going to do is move this up, and I'm going to base this on closes real quick. And then because we're basing the bottom side on closes, I want to base the top side on closes as well. And that actually gives us pretty much a horizontal top side resistance. Track that to there, track this down. It's not going to be perfect, but it looks just about horizontal. So just about there. We are seeing higher lows, and we're seeing just about the exact same highs. This in general is a bullish formation, but we do need to see confirmation towards the long side. We haven't seen it just yet, but we may just see it within the next couple days. This is the daily candlestick time frame, where we are currently butting up against that top side resistance that we've attempted to break through 1, 2, 3 different times. We are continuously seeing higher lows, which means we are seeing sentiment and just the general push back up towards the long side is bullish in general. So hopefully we can see a nice little breakout. Actually, this is sloped. Let's bring that down just slightly, and that still lines up pretty well. So we're still seeing that horizontal resistance right through here. If we can see a nice daily close above that level, I'll look at the weekly real quick as well, because that could have a pretty major effect. Just I haven't looked at it just yet today. Could have a pretty important effect on this breakout depending on these topside resistances. But on the daily candlestick time frame, if you're waiting for a daily confirmation, a nice break above this level and daily candlestick to close, then we're actually looking pretty good. Our next level of resistance does align with these topside shadows and our previous support. Where's my horizontal? Previous support through here or so. We can bring that down to line up. Previous support based on these bottom side closes, we actually usually see that. So if we see top side shadows through here, we usually see, if we do see resistance, we usually see it based on bottom side closes. Same for the opposite end. We just see it flip. Same for those trend-based fib extensions and those fib extensions. If you draw them based on closes, then we actually usually see the shadow-based price action react a little bit better. If you draw them based on shadows, we usually see the close or open-based price action respond to those levels. I don't know why that is. It's just something I've noticed, and it might not be perfect every single time, but just a little tip. So that's what we're seeing right now. We're seeing the first confirmation, and really probably the main confirmation would be a close above this level, because we haven't seen closes above 44.5 so far in the entire intermediate term. in terms of absolute price action, we haven't seen a high above 46. So that's where you kind of have two options. If you're not a close-based trader for the trend following strategy or any type of strategy, if you like to trade based on shadows and just new highs, then it would be right around 46. So that's what we're looking at for Bitcoin so far. Let's move over to the weekly, see if it tells us anything different. Oh, don't leave. And it's about the same thing. Top side shadows through here, bottom side closes through here, bottom side shadows aligning with our top side shadows through here. It really gives us a better idea in terms of absolute price action from our closes on the weekly, or actually our shadows on the weekly. And we've already seen, no, we haven't already seen, we've got 2 days and 8 hours left for this weekly candlestick to close above our previous high, which is right around 42,382. So unless we see a big breakdown and a bounce off of something like, that'd be a little bit higher. No, somewhere around that area. If we see a push down, I would maybe around here. That's not bad. Right around 41.8. Unless we see a close or this weekly candlestick close below 41.8, we should have the most amount of probability towards moving back towards the long side. Finally, for Bitcoin to US dollar, maybe a bull trend in the next couple weeks, maybe in the next couple days. We'll see, but we need those confirmations to find out. Otherwise we're just guessing and we're just gambling. So let's go ahead and move over to Ethereum or Ether in just a second. But any questions? Can you do KNC analysis? I sure can. I just did a KNC analysis this morning for one of my personal trades. It's at, oh, that's Ethereum. Let's find KNC real quick. I may have to add it. Yeah, let's just go ahead and search that real quick. KNC on Bybit, the perpetual contract. KNC to US dollar. Let me know if you want KNC to Bitcoin or anything like that. KNC to Ether. Let's zoom out to the 2 hour just because there's not a lot of price action. Like if we look at the daily, that's not enough price action for me to really, unless you're looking at, intermediate, like heavy intermediate to long term. Must be a pretty new pair listing, KNC to US dollar tether, that perpetual for Bybit. So we don't have a ton of price action. We could look at another exchange's chart just to get a little bit more historical price action, but we have a general idea as to the trend from the beginning of this year. So from January, February, March, and it's about to be April. So 3 months worth of price action. That's enough for a shorter term trade. Let's first look at the 4 hour because that's going to have the most influence. Zoom that. And what are we looking at right now? Let's go ahead and draw a nice little depiction of our current formation. It's kind of what I like to start with, even before our horizontal support and resistance flips, just to get a good idea. So first, we're going to draw it based on our shadows. Always do this first, and then we're going to try out based on closes. Going to try out basically a few different variations. And that's what we have, pretty much parallel. Not perfect, obviously, but good enough for me. So nice little parallel move towards the long side. We're seeing those higher highs and those higher lows. Now let's draw it based on our closes and see what that says. So there's our closes for our trough. There's our close for that next little corrective wave. And then we've got our close through here, our close for our tops. Those are almost aligning for a double top, but just not perfect. We can actually stretch this out and see how that looks. How much of a difference is that? From 3.15 up to 3.159, 3.154 to 3.159. Let me measure that. I'm not sure. We'll see. Let's measure that real quick. Is that enough to make it completely flat? 0.12%. What am I kidding? Who am I kidding? Why am I not doing that math in my head? Let's bring that down. Let's make that a flat top. Very similar to Bitcoin at the moment, based on closes as well. And I like that. Let's bring this all the way back. Close out my little dictionary. Bring this all the way back as far as we can. And there's our horizontal support and resistance flip for the top side. Actually make this red for resistance. And our bottom side support at the moment. Let's bring this up to that to make that align a little bit better. We're actually seeing a poke through from our bottom side close, but those will most likely form shadows if we can see a proper continuation from this current formation at the moment. This nice little right angle triangle. Flat top, angled bottom, right angle, and hopefully we can see a push above through here if you're looking at the long side, and a confirmation above right around 3.15, 3.16 to be exact. We can move it up a little bit higher. I'd probably set that for a confirmation. Right through here, maybe a little bit higher, a little bit more conservative. Nice little confirmation above there, and I'd be comfortable opening up a long side trade. For the short side, I wouldn't open up a trade based on a close below this diagonal support just because I don't trade based on diagonal supports for confirmations. So we would need something horizontal, which would probably be, first we look at support through here. That makes a lot of sense to me based on our current price action, which, wow, it's pushing down. Let's make that support real quick. And that's probably what we're looking at. Add confirmation just slightly below there, maybe below there. And you're looking at, if we can see a 4-hour close below that level, it's decent confirmation towards the short side, but I'm a little bit more comfortable towards the long side at the moment. So hopefully we do see a push in the next 3 hours and a close above this little diagonal support through here, as well as above our horizontal support through here. And that would form a nice push back up, continuation of higher lows based on bottom side closes, and probably one more push up against the top side, a break above that level. You're looking at a long side trade to the moon. All right, let's go ahead and do this. There's only a few people in here, so you guys are going to have a really good chance of this derivatives bonus. So if you guys are derivatives traders and you have a Bybit account, let's go ahead and set up this giveaway. It's going to be fun. It's my first time doing this, and we will do some other giveaways in the future. We're setting up spot giveaways such that you don't need to be a derivatives trader, have a derivatives account to actually get the giveaway, and we'll just give away like $50 US tether. So this is going to be a derivatives bonus worth $50. Let's go ahead and set it up. I actually have to move over, and I'll show you guys. Basically, you're just going to go to a little website on your phone or on your computer. So let me present this. Give me just a moment. It's my first time doing this. We're going to share this tab. Let me make sure that looks good. All right. So if you guys would like to, oh no, hasn't. Okay, get out of this. Share this. Here we go. Let me make sure it's live real quick. But basically, you're going to go to this website, type in that code, and pretty much just add your Telegram or your Discord name. Either one will work for this giveaway, and we'll be able to find you. Let me make sure this is live. Bring this up. Are we good to go? Voting is open. So I'm probably going to give this 3 minutes, starting whenever I started talking about this. 3 minutes for everybody to, no results yet, for everybody to submit their Discord or their Telegram names. And just because there's a few people in here, you guys are going to have a good chance of winning this. So I'm going to give this 3 minutes until we hit that the end of the hour. And then I'm going to go ahead and randomly select a winner. It's going to be a fun little wheel spin. But, you know, in the future, maybe we'll have some more participants. And it's going to be a little bit harder to win. But we're going to try to up that prize to make it worth it. And we're also going to try to, I'll probably change it up a little bit and have select multiple winners in the future. Go ahead and submit either your Telegram or your Discord name by going to menti.com. It's going to have you type in the code 42030331. And I'm going to give it 2 more minutes for everybody to enter that. I think these giveaways are going to be a lot of fun in the future. We're going to get a lot of people joining in and entering. But yeah, let's go ahead. I'm trying to think of anything else that we want to cover on this stream. If anybody has any other questions, go ahead and drop them down below, and I'll probably give it 7 more minutes before we conclude this stream. But 1.5 minutes left. Submit your Telegram or Discord name. If you have submitted your Telegram or Discord name, give me a thumbs up down on the chat, or just give me just to let me know that you guys are good to go. There's no problems. If anybody's having problems submitting or with the website, let me know as well. So I'd like to make sure somebody wins. Let's see. Everybody else having a good morning? I guess it's probably not morning for most people. Typical American. Thinks that the world revolves around Texas. Telegram. All right. Sounds like submissions are working. Good luck, everybody. Just about 50 seconds left till I close it out and we select the winner. But we will be doing these every single week from now on. So go ahead and, set some notifications. Looks like we got 2 people. I can see that real quick. 2 people have entered. 50-50 chance. 30 seconds left if you want a very good chance of winning this $50 Bybit derivatives bonus. Hello from France. How's it going? Good to see you, man. You've actually got 20 seconds. If you want to go to this website, submit that code, type in that code and submit either your Telegram or your Discord name. for a free $50 derivatives bonus from Bybit. Just about 5 seconds left. I'm going to close it out now. We've got 2 people. This is going to be a tough one, guys. Let's go ahead and close that out real quick. Gonna move over and close voting. There are 2 results. That's just all right with me. This is the first giveaway. I don't expect it to be a ton of people in here, but let's go ahead and I'm going to remove this page and I'm going to get those Telegram, Discord names. That's fine. I can just, let's show the results. All right. So let's go ahead and move over to the wheel of names. I like this website's funny. All right. So I'm going to copy this. This is going to make sure it's nice and random so you guys don't think I'm like friends with Takanola or any of these guys. And then we got Oluwazandi. And it's a 50-50 chance. If you didn't get a chance to, I hope you guys can still see those. If you didn't get a chance to enter the giveaway this week, we will be doing these every single week. So don't worry. They will be every week. Too late. Sorry about that, Loic. But I wanted to make sure that it was, we closed it out and it was nice and fair. So next week, go ahead and join in and submit your Telegram. And let's go ahead and spin this. Oh man. All right, Oluwazandi. Don't know how to pronounce it, but you are the winner this week for the $50 derivatives bonus. We will reach out to you on, is that Telegram or Discord? Let me know in the comments. But we can reach out to you on both. But we'll reach out to you and make sure that is distributed. I think that it can take anywhere up to 3 weeks, but it should be sooner because I'm going to do that. I'm going to try to submit everything today, but we'll see about processing. But there is our winner for this week. Congratulations, Oluwazandi. Sorry, I'm not pronouncing that right. Let's go ahead and take that off. I'd like to thank you guys for joining in this week. That's Telegram. All right, I will note that. I'll write that down and get that submitted today so that you can get that bonus as soon as possible. Remember, every single week we're going to be doing these bonuses, and they're only going to get more exciting. This was really just a test stream / test bonus this week to kind of get the process down, make sure everything worked pretty well. It seems like it worked pretty well. We got a few people to join in. Really good chances for those guys that did give it a shot. I'd like to thank you guys for joining in to this week's live stream. This has been Trading Mindset. My name is Brandon Zayats. I'm just a little trader. I like to make content on YouTube. Not anymore. Now I'm doing it with Bybit. You can check out Bybit's Crypto Beat. It is a weekly series where we dive into just about any concept that we can think about within crypto. Those come out every single Monday at like 4 or 5 a.m. my time. Just check them out on Monday. Subscribe to the Bybit YouTube channel if you'd like to see those when they come out. And they're pretty entertaining. You can hear my voice, see my face a little bit more. If you, so silly. If you'd like, but I'd like to thank every one of you guys for joining in on the stream. I hope you guys learned just a little bit more about the emotions of trading and technical analysis. Next week, same time, Trading Mindset. Thank you guys so much. See you guys later. You guys are great. Thank you so much. Have a good weekend.